Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me to discuss if a potential increase in the capital gains tax rate might not have as big an impact on the stock market as many assume is Brian Levitt, chief global strategist at Invesco. Brian, welcome back to Trade Talks. And you've been vocal about election impact on the equity markets, and they don't necessarily mean what investors might suspect. And then you inevitably get the question on capital gains taxes. Before we get into that aspect of potential policy change, remind the audience why election impact is being overstated.
Yeah, I mean, it seems like inherent in the view of the concern of elections on markets is that investors seem to have this fear that there's candidates or parties or presidents of the past that aren't good for markets. There's nothing in the data to suggest that. I mean, I've been alive since Gerald Ford, and so every president of my life, with the exception of George W. Bush, not only experienced positive returns over their term, they experienced positive double-digit annualized returns over their term. So it's kind of hard for me in my lifetime to think that if you're getting double-digit annualized returns, you're doubling your money every 7 years or faster. That's across all of these presidents and all of these different parties. It's hard for me to think that it matters all that much when the record suggests that it just doesn't.
Well, what happens if we don't know the results for a while? Can't you lose out by not being invested while they're trying to time a resolution?
Well, look, I don't want to sugarcoat it. If we go a little while without knowing the results of the election, you may see volatility in markets. Market volatility tends to arise when there's policy uncertainty. We've seen this before in 2000 when we didn't know the results of the George W. Bush Al Gore election. Markets were down about 5% until the Supreme Court ruled on it. Now, I would always ask investors to ask themselves two questions at all times when they're thinking about markets. What's the direction of the economy over the next couple of years, and how is monetary policy acting? And does the event that's happening cause you to change the answer to those two questions? If we don't know the outcome of the election for 6 weeks or 8 weeks, does that change the trajectory of the economy over the next few years? I would argue it does not.
Yeah, that's a good point. And did the two previous hikes in capital gains taxes lead to an increase in stock selling? Because the question is it worth not owning stock and missing out on gains just to avoid the tax?
It actually did. In 1986 and 2012, investors did sell equities ahead of the capital gains tax increase. You could see it in the data from the Department of Treasury. But if anybody remembers those years, 1986 was a great year for stocks, and 2012 was a fine year for stocks. So even though there is some selling ahead of it, it doesn't necessarily seem to have a significant impact on the market in those given years.
Does this impact institutions which own the majority of stock anyway, or is this for individual investors? How does that work?
Yeah, that's a great point. I mean, everybody talks about, well, the capital gains rate is going to go up. Then obviously that means markets are going to go down. I mean, first of all, there's so many things that have to happen. First, an election, single party rule, what you want to, if you have that, what you want to do with the mandate. But then also who's being impacted by it. I mean, if you look at Joe Biden's plan, it's American households earning over $1 million a year, which is a very, very tiny percentage of who is exposed, who owns the equity market. To your point, institutions, pensions, endowments, retirement funds, I mean, foreign investors, this is a big percentage of who owns the US equity market. It's not, American households earning over $1 million a year. In fact, American households in general own a little bit more than a third of the market. And then you take it down to earning $1 million a year or more, it's obviously significantly less than that.
All right, Brian, appreciate the insight. Thanks so much for joining us on Trade Talks.
Thank you.
And thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.